fucking tired right now. Oh, God. It's cool. It's cool. I'm so fucking tired. Alright. Am I live? I am live. Cool. Cool. Chat, how does the audio sound? I've been trying to experiment with it and fix it. So, I don't know. I don't know how it's doing. Jesus, fuck. Yo, Charlie, what's going on, man? You can't sleep? No, I wanted to stream. You know? That wasn't 30 though. Audio is fine. Thank you. Yeah, I got a little carried away with something. Fuzz and feedback when I talk. Let me take a listen. It's probably the laptop fan. I want to pull this up. Test. Motherfucker. Dave's Daily Trades sucks. Fat cock. Test. Motherfucker. Dave's Daily Trades sucks. Fat cock. He do be right. It's 11 a.m. here in Germany. Good work. Thank you, man. Thank you. It was very... Some say he's a superhero. Fuck you, Charlie. I just had a great idea because I know there's a lot of new people who, I want to say this too before I tweet the link out or tweet the stream out. The streams can be rather explicit. Yeah. And I don't want to, and I will fucking not change that. I will, in different contexts, like if I'm on with Charles Payne or whatever, you know, I'm gonna be respectful, right? Just out of humanity's sake, but also because it's not my domain, right? Charles Payne's TV show is not my domain. Whereas with this is my fucking territory, right? And I'm not gonna be any fake BS, so I'm not gonna change anything. But I just had this idea of slapping this on here. Oh no, the words. People using words, the horror. Yeah, no, it's fucking amazing, man. It really is. Some people are just too fucking soft in this world. You know? And on top of that, like, there is a time and a place for where certain types of language are not are not appropriate, not respectful, you know, etc., etc. Is this too edgy? Is that edgy? I thought it'd be a cool throwback to like the 80s. Shout out to my man Ronald Reagan. Can we squeeze already? I want to quit university. I don't blame you, man. I don't blame you. We're very close. At least with this, what the cycle has to say. Is this too edgy though? Is the parental advisory thing too edgy? I thought it'd be a cool throwback. I like an album cover. I like it. Dude, I am. I'm tired. And I got an ingrown hair that came in right here, and now it's turned into a little boil, and it's unfortunate. It kind of adds to the definition of my jawline, but it hurts like a bitch. I wonder what Unusual Whales would have to say about this. I'm not gay, but I'd smash. Do you have any idea what it's like bouncing a fleshlight to a mirror? Man. I need to figure out how to make the streams clippable. For some reason, YouTube doesn't. Is anybody? Two things. Can anybody clip? Right, and if not, does anybody know of a service that I can sign up with that allows for a solution? YouTube was demoing or beta testing a clipping feature, and then I guess it just went away. They're doing more updates to it. Fiverr? No. I mean like software wise, or not software, but as in a feature. Like if you watch anything on Twitch TV, they have a built-in clipping feature, so that you can take 30 seconds from the stream, or whatever the time period is, and then it gives you like a easy to share link. It's super straightforward and streamlined. I'm trying to figure out why that doesn't exist for this. Wait, or does it? Wait, yeah, does it? Yeah. So like I can clip it from my side, but I can't. Maybe it needs a what do you call it? Maybe you need to be signed in. Bro, you used the word stasis, the perfect way to describe AMC and GME price action. It proves the price is fake. It's all a wrap. GG, nice work, dude. Thank you. Okay, so there's a lot. Carrie, you have it? Okay. Neil, the YT app has it. It'll send you a screenshot on Twitter. Or else. Okay. So it does. Okay, you guys can then. Perfect. All right. Never mind then. Because there's a lot of good moments that come from this, and I wish it was possible for me to make it easier or more apparent that you can clip the streams, and now that I'm starting to get some popularity, more so than prior, you can post stuff, and because my face is becoming more and more recognizable, then you can post clips. It makes sense, right? Yeah, it's not gonna give you like a super long time frame that you can select from, but I'm sorry, it's not gonna be a super long time frame that you can select. But enough so, anyways. I don't know if you remember me, but I'm the young guy with a lot of share. Oh yeah, yeah. Well, I think so, because there's a few people like that. If you're 19, yes, because I remember that your age was 19. If it's you, if I'm thinking of the right fucking person. Yep, I remember. Of course, man. Like, you got... Oh my god. For real. I'm not trying to dad you, alright? But... The blessing that you've run into, my friend... Take a quarter of it, okay? Take a quarter of it. And just put it somewhere, right? Just put it somewhere. Did Sam get some sleep? You sound clear-headed. I did. Yeah, I've been sleeping a little bit better. Well, more, I mean. I asked the other day on Twitter for constructive criticisms. And somebody mentioned my ability to coherently explain things and stay on topic. And it reminded me that I had been struggling with that for a while. And I'm trying to work on that again. Because there's just so much that I always try to cover all the bases whenever I'm explaining things or talking about something, because what I do, here we go, I'm doing it right now, and that's another version of it. It's 3, 4 now. Yeah, that's peak fucking ADHD right there. But I always try to cover all the bases as I'm explaining something, even if they're out of order, because the way that my brain works is that you can give me a sequence of things to remember, and I will place them in order dynamically. So if you say I don't know, ACB instead of ABC, I'll automatically think to myself that, okay, ACBs, well, B comes before C, and okay, so it should be ABC. Whether that's like a, sequence of events or a story or whatever. So I do that automatically. So that's how I listen, and that's how I interpret. So when I'm talking and others are interpreting, I assume that they do the same, and most people don't, or at least that I know of. It's just a very confusing and it doesn't help, you know what I mean? When you explain things the way I do, where I'm all over the place. And so to make a long story long, I'm trying to fix that. I'm trying to at least be more aware of it. You check Twitter? And Sebastian, yeah, just take some of that, man, and put it somewhere safe. You don't always have to have money in the market. You don't. I'm not saying that you do, but these were things I wish I knew back when I ran into money like that. You don't always have to have money in the market. Not having money put into a position is a position of itself. And just tuck it away somewhere, right? Like that's such a like when you don't have to worry about money, at least for most things, like, you know, can I get groceries this week? Can I pay my phone bill this week? Is this payment set up so that it doesn't overdraft my account so then I can pay this next? Like, when you don't have to worry about that because you got however many thousands tucked away somewhere, you really can it allows you to focus even more on the things that you're doing to earn income outside of the market, which gives you more opportunity to hone in on your craft and not have to stress about stuff, which gets in the way of productivity. And I don't even need to explain why it's good to save money, right? But please, for the love of God, and I'm talking to you like I am to myself in the past, take a quarter of it and just fucking put it somewhere safe and don't fucking touch it unless you have to. Yeah, Sebastian fucking killed it, man. Alright, man, let's see what you got here. I find it hilarious that you assume that you know anything about the bond market. Nothing in my comment even remotely mentioned or even alluded to bonds or anything related to the market at all. I'm just a retarded day. My brain isn't smooth as a baby's ass. I only eat the red crayons. But how did you know? Are you stalking me, Richard? Are you psychic? Like, actually, I'm just impressed as I am low-key freaked out. Currently, the Pristine Collateral crisis. Right, so the reason why banks are able to exist, why lending of any kind is able to exist, like anything of relative too big to fail, right? Banks are too big to fail. You know, like if I really wish I could come up with another example of this, but I can't right on hand. I'm sure you'll think of some, and if you do, please leave them in the chat after I explain this real quick. The reason why too big to fail, one of the reasons they're able to exist and do what they do, right? Too big to fail is this idea that no matter what happens, they remain operational. Is because of the fact that the amount of time they have at their disposal. Yo, Pint, what's going on, man? Welcome. The amount of time that they have available to them is more than that of you and me. And I don't mean literal time. What I mean by that is if I had to take out, you know, if I had a $10,000 transaction that I had to make, right, I'd be fucked. In fact, I'm still waiting on my check at the moment from my 9 to 5, right? If you hit me for $10 right now, right? Shit. But you hit a bank with 10 grand or $10, they have so many ways to securitize that debt, right? And I'm using that term relatively, debt, such that whoever your party of comparison is, right? So me in this case, I would suffer and fail before the bank does from a $10,000 transaction, right? I am too small to succeed. They are too big to fail, because when they have situations that come up, they have a lot of money on hand. Also, Pristine Collateral. And I've done some reading into this. I'm not 100% familiar with all the terms and the semantics and this and that. But I'm comfortable explaining at least the fundamentals of why Pristine Collateral is so important. And that is, Pristine Collateral is a guarantee of some sort, of the highest promise. Pristine Collateral is pretty much, it's the closest thing to printed money as an IOU, right? Whereas other forms of collateral, like, assets of quality, like, put up some property, put up some assets of the securities markets, you name it, right? Yeah, that's nice, but it works. It is collateral, but it's not pristine. Well, why does pristine collateral matter that much? Because it's the closest thing to a guarantee. Well, why does that matter? Why would a shortage of pristine collateral be such an important thing when there's already plenty of types of collateral? Well, pristine collateral has the value it does because of the highest of guarantees it can give. Why would there be a concern of the quality of collateral if something were about to happen or anything below it wouldn't be able to substantiate? Sound a little odd? Just a little. It's like if you're in the middle of keep reading? Oh shit. Okay. Let me finish this little tangent then. It's the same way of if someone's telling you if you're going into the starting phases, the discovery phases of a partnership with another business, or you're taking up a new opportunity, they have you sign a contract. Well, it's not that you're a bad person. It's not that you have any means of releasing some form of information during your interviewing phase that something is said during your interview and then you go out and start talking about it, right? It's not like you would ever do that. Okay, you get hired and now you got all this information. You're not a piece of shit. You're not going to go around and start telling people whatever the company's doing. But, right, you want the guarantee for in the event that something does, right? And that's because of the implications of if it were to happen, right? They want a contract signed because that means more than your word, at least in the court of law. So, let's get back to this. Shit. Hallelujah. Where did that go? Found it. And real quick too, if anybody's new in here, you just subbed from the discovery that I made. If you're lurking, feel free to chat. We banter, we talk a little shit to each other. But we all love each other. We're just having fun. We're having fun and we're fucking learning, right? No bullshit, right? If you're gonna bullshit, we're gonna bullshit you right back. And we're gonna fuck your world up. It's only if you're a piece of shit though. But if you're lurking, feel free to chat. Nothing to fear. Okay, so oh Jesus, that's so loud. Yo, I'm just gonna call you Chris. Chris, thank you for the sub. I want to also turn down the volume on this thing. I don't know why it's so loud. Are the alert sounds loud for you? Dude, I can feel my drowsiness in my I can feel it in my eyes right now. Look at this. Fuck. What the fuck just happened? Dude. Fuck. Yeah, looking like a shiner for sure. Trying to see if there's a good angle where it just looks like a fucking tumor. Maybe? I don't know if that's my jaw. No, that's just my jawline, I think. I don't know. Any men out there who aren't just now going through puberty at the age of 22? When you started having thicker facial hair grow in, did you start getting like really bad ingrown hairs? Or am I just genetically fucked? Shit. Alerts are okay. All right. What are you thinking for Monday? Mr. David. I did a video on it. The most recent update. But so you don't have to leave this. Monday looks like the shoot up. And I found something even bigger. I tweeted earlier about it. That just reminded me. Okay, I need everybody to have the fucking hide those tweezers. I had to throw mine away, man. Which Jackie might. Yeah, no, that's what I've been fucking doing. Yeah, it fucking sucks. I hate it, and I'm pretty sure that the more you tweeze said hairs, the more it becomes like a literal cesspool. But I've just now been growing like visible facial hair that doesn't look like some rat tail that every edgy kid in high school had from his upper lip, you know? Like it's somewhat uniform now. It's filling in here, minus this. Here, and then this feels weird, dude. It's like it feels like a fucking mature male, you know? It reminds me of when like I'd give my grandpa a hug when I was a kid. And you'd feel they're fucking super mature, aged and wise beard hair. It's weird. It's just fucking weird. Same, the cheeks for me don't want to come in. But hey, you probably want to go in the cheeks, am I right? Yeah, no, it's been frustrating. I feel that. Out of interest, what are your plans for after the squeeze, dude? I don't know. pursue a music project full time. And I would make a YouTube channel out of that, which is actually what me and my old band had started doing, but we imploded not even before, as we were starting to get some popularity. Long story there. But we were doing really well, and we started filming everything and turned it into like it was like a Nelk Boys styled video format where, I mean, I've got two good friends of mine who run a production company together, and we scrounged up some cash, and we started having them follow us around for shits and giggles. And it was actually pretty fucking funny. It was really entertaining. And it was supposed to be like it highlights all the fuckery we were doing and having fun, and, on stage footage of us playing in rehearsal and all that shit. And then we imploded like 3 weeks later. Especially with ADHD, definitely a side effect of the medication. That's why I threw my tweezers away. Yeah, Adderall will fucking do that. I've gotten better. It used to be really bad for me when I was first starting on Adderall. Way back when. It sucks because even if you didn't know that I took Adderall, you would assume that I did. Even when I'm not on Adderall, you would assume that I do. The fuck? Oh. This is just how I am. Adderall just allows me to maintain a larger scope of focus. It makes it easier for me to get into that zone, so to speak. With your DD, can we actually track the future price action? Yeah. If you go back and look at the VODs of my streams from the past 2 weeks, you'll see me doing it. In fact, I want to find a clip of it right now, because I've been meaning to do that so I could post it. And then with this, but how did you know? I just read that. Ironic. So this is talking about the Pristine Collateral shortage. Let's see. Right. So currently, commercial banks are experiencing an extreme pristine collateral crisis, which is treasury bills, right? Which is literal notes of like, hey, this is signed by Uncle Sam, and he's saying you're entitled to $1 million or this, that, or whatever, right? It's just it's the most official bullshit currency there is to ever exist, an IOU from the money printing factory of the United States. So there's a pristine collateral crisis, which is the treasury bills. And this is partly the reason why reverse repos are at all-time highs. There isn't enough pristine collateral to balance out the other side of the transaction, but the collateral crisis isn't the reason Papa J. Powell, the chairman of the Fed, took action. No, it's to keep the treasury bill yield rates from going negative, which would be catastrophic, by the way. If the rates go negative or to zero, the financial system blows apart. The Fed doesn't have the capacity to peg rates because their balance sheet isn't large enough. $326 billion in treasury bills compared to $1 trillion. Compared to $1 trillion in the reverse repo facilities. Do you see a discrepancy? I do. I actually do, in fact. So they're essentially in a nightmare scenario here. Ironically enough, this scenario is the direct result of the Fed's quantitative easing policies going far longer than they ever should have been. Quantitative easing drives investors to save cash rather than getting notes and bonds, which is not a good thing long term. Well, it went long term, and now everything's on fire. Yeah, it's called inflation. So what is the Fed doing to mitigate this nightmare scenario? To put it simply, in order to keep rates from going negative, the Fed is going to slam the long end of the curve. Let's look at the standing repo facilities recently established by the Fed. Under the SRF, which is it's basically a place where you can store your own long securities and positions with someone else. It's just the reverse repo market for the equities market. It's fucking crazy. But somebody who is willing to loan out money to you in exchange for your long positions such that you don't have to sell them. Because if everybody who is short in all this started to just sell to cover for their shorts, the entire market would go tits up. So with the SRF, which fuck me, I can't remember. But the SRF, I'm sure it'll come up here, is a facility that provides a place that you can put your long positions into with somebody like BlackRock, somebody like Vanguard, and they'll give you money as a loan, and then hold on to your long positions for you, right? For you to then buy them back, and of course there'll be interest that's tacked on to that. Everybody makes money. Those who fuck this whole thing up in the first place get to unfuck it up by covering. The apes get what they want. The markets don't get utterly shafted. And yeah. So back to this. Under the SRF, the Federal Reserve will conduct daily overnight repo operations against Treasury securities, agency debt securities, and agency mortgage-backed securities with a maximum operation size of $500 billion. The minimum bid rate for repos under the facility will be initially set at 25 basis points. The one that we're experiencing right now is only 5 basis points. And this explains also why, I can tell later, which is somewhat above the general level of overnight interest rates. Yeah, the current level of overnight interest rates is 0.05%. And now they're driving it up to 0.25%. And this is a great comment, by the way. Thank you for sending this to me, Van. So what the fuck does this mean? Well, look at the types of collateral that can be posted. They turned the whole curve into pristine collateral and made it liquid, meaning that it's because it's been converted into a liquid pivot point, so to speak, that positions can be created out of now. It's like if you had a business credit card, right? That you're only supposed to use for business transactions. If you were to then pull out cash from that, you have added liquidity to your business credit card. If you take out a cash advance with that business credit card, theoretically, and I'm not saying to do this, I'm not saying to do anything, by the way, but you've created a pivot point for liquidity where now you can go out and buy things that aren't business related because you have cash. Whereas imagine in a world where anything that wasn't a business transaction would just get declined ultimately. Because you have now taken out a cash advance, you've extracted liquidity from what was originally an illiquid transaction device. So what the fuck does this mean? Well, look at the types of collateral that can be posted. They turned the whole curve into pristine collateral, the curve referencing how inflation was supposed to be handled, and made it liquid. We now have full liquidity across the board overnight, which is something that the Fed should have done a long time ago, IMO. What the SRP facilities do is incentivize people that are holding treasury bills to sell them because pristine collateral is in a massive shortage. You're basically having a short squeeze in the reverse side of a short squeeze. So the banking system and money market funds can get the collateral it needs and pushing the people selling the treasury bills to buy notes and or bonds. So now they're inspiring liquidity by creating illiquidity. There's inverses in everything in life, in markets, but also in life. And that's what this whole entire thing has taught me about. And as I've trained myself to look for inverses and the opposite sides of an event, everything in my life has gotten better, and I've been learning a lot more, and I'm getting a lot more done. It's amazing. But what he just explained of how these treasury bills, which are the pristine collateral, were initially an illiquid instrument, so to speak. They were you can't go to 7-Eleven and get a Slurpee with treasury notes. Well, you could. Somebody would take it and cover it themselves, right? But that's not a feasible way of performing business. There's a lot of financial friction involved there, or inefficiency rather. So by having these what is supposed to be illiquid, in today's terms at least, an illiquid means of collateral or currency or just something that allows for a transaction to take place on the buy side. They have created a way for transactions to occur that normally would be outside of that thing's capacity. If 7-Eleven started accepting let's see. Oh yeah, no, if 7-Eleven started accepting treasury bills and then would turn around and sell them back to the government, right? That's what the equivalent of this would be. Slurpees are Moaz. Sorry. I'm all over the place and tired as fuck. So the Fed realized that by getting people to sell the treasury bills, it will cause the rates to go up, aka not go negative, which fucks the whole system up more than it already is. If they can get short-term yields to be more than 5 basis points, so 0.5%, the money market funds and banks will go to the market and buy the treasury bills because the SRP facilities incentivize the people sitting on large quantities of treasury bills to sell them and buy notes and bonds. As a result, intermediate and long-term rates will go down, aka slamming the curve. Also what this means, and I just realized this, the Fed is on the short side of a short squeeze. Привет. The Fed is caught on the short side of this, so to speak. As in, nobody's selling. Nobody is selling the notes, right? Just like how apes aren't selling, you know what? And because they're not selling, now the Fed isn't playing all nice guy and be like, oh, well, name your price. They're saying, fuck that shit, bucko. You're not beating us at our own game like that, right? So that they can then say to those that are short in the equities market with AMC and GameStop and all these things, they can then say to those who are short, hey, you don't get to beat them at their own game like that. That's kind of how it's playing out here, I think, where by the Fed, by the upper layer of all this, taking the initiative to put the foot down, it allows for them to have leverage back in their hands so that, oh my God, this makes a lot of sense now. Holy shit. Holy shit. Wait. I needed to make sure I hadn't. Never mind. I've had a theory since late April, right? That Welcome to the DD. Keep going. Fuck. Let me get this out of the way real quick. Way back in May, late April. I promise I'll be quick. Van. Calm your tits. Jesus, fuck. Way back in May, I had this theory that those who went so short that when it was to be discovered on a balance sheet would spell, oh fuck, right? I've had a theory that before COVID happened, like within a month or so of the headlines from China hitting the US, that these massive financial institutions, whether it's your Citadels, your Melvins, this, that, or whatever, all decided to open up short positions of a colossal size, knowing that they wouldn't be able to cover for it. The reason why they would do that in this theory is they understood that not only would they be making money because when COVID was to hit the States, the equities market was going to do something bad. The entire market in general, actually, was going to go down from it. So, profit. I think they also knew that raw cash would not be handed out to banks, because when banks are given cash to supplement, well, just in general, actually, when banks are given cash, they do fucky shit with it, right? Because cash is king. It's the most liquid. It's the easiest thing to make a transaction happen with. So instead, they would give them the next best thing, which is a treasury bill, because treasury bills are illiquid. They don't move around and allow for transactions to happen so seamlessly, right? There's few to little pivot points, right? Few to little places where you can make a transaction happen purely from a treasury bill. Whereas with cash, now you can convert that to anything. Treasury bills, the only place you can redeem those are the Fed, right? So I think hedge funds knew, market makers knew, whoever the people who are caught up in all this, whoever created this fuckery. Yo, high class bum, what's going on, man? Whoever opened this position that they knew was not ever coverable, right? I think they had anticipated this, or they knew it, or just in whatever case, according to this theory that I have, they knew beforehand. All right. The idea was to put their prime brokerages. What the fuck did I just say? It's a prime brokerage. Yeah, okay, yeah. So it was a premeditated plan to rail, like bend over and like no pillow to bite on and no lube, like they're prime brokerages, okay, or prime brokerage service providers. Well, what is prime brokeraging? I'm too tired, man. I can't remember my vocab now. A prime broker is some big name bank or financial institution or whoever is too big to fail, giving services to other too big to fail-esque entities like hedge funds, banking services, right? They help manage inventory. They help manage balance sheets. It kind of conjoins them both at the hip. So hedge funds and banks are merged into this Y shape where now they have created liquidity for themselves in the sense of how legality works and how, it's a conflict of interest to be a bank and a hedge fund. But, according to the fine print, it's not if you're using a prime broker service. So, with that in mind, so I can get back to this. This was sent by Van CLVG in the chat, by the way. He sent this to me. And this was originally written by... oh, wait, this was by you. What the fuck? Good shit. Good shit. Good fucking shit. Good shit. It just hit me. It just hit me. He wrote the fucking thing. Goddamn. Good fucking, yeah. Good shit, dog. Van Cleavage. Yo, I love it. 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 I love you, Cleavage. And I love Cleavage. I wasn't even I'm more worried about what the DD is. I'll get to the whoever authored it after. That's always how I handle it. So, with that in mind, I think what was going to happen is that the bank, the prime broker for these hedge funds and market makers and whatever, any form of where that type of relationship was, these nefarious members were going to subjugate and manipulate their prime brokers into a short position without knowing it, right? Where the prime broker is like a father who's rich as fuck, and he's got this spoiled little shit of a kid. And the spoiled little shit of a kid is your Citadel, your Melvin, insert name here, right? Knowing that, okay, bucko, you really fucked this up. You've made the balance sheet drop by a net fucking 30% within a single quarter. So listen, I can't get you the Rari this year, okay? But I'll get you a Koenigsegg, okay? I know you wanted the Rari, but we'll get you a Koenigsegg. Just shut your fucking mouth and get good grades, okay? Bring that balance sheet back up. We'll make sure everything's okay, but don't fuck this up again, all right? Now, instead of just putting up cash because they're rehypothecating, they're putting up more money to maintain their position. They have to put up more collateral because of the loss that they just incurred. They being the hedge fund in this hypothetical, their prime brokeraging service, will put up for them, right? I think the hedge funds knew, whoever the bad players were knew, that it wasn't going to be cash they would use because they want to hold on to cash because that's king. Treasury bills are the next best thing, so they put up those instead. The problem is that this kept happening and happening and happening, right? And then finally, when the GameStop thing happened and the AMC thing happened after, actually at the same time, technically, now hey, JP, Morgan, shit, oh my God, man, it's been a while, man, how you doing? It's J Powell. I know I gave you some treasury notes not too long ago, because of COVID, you've been writing those 0% APR loans for the people, the hardworking people in the fucking businesses in need, right? The people who are losing their jobs and businesses and people in their lives, and you've been writing those loans. Oh, what the fuck do you mean what the hell? You've been putting those up as collateral for those who are nefarious and irresponsible with the leverage they have access to? Shit. All right. So now, when you actually need to have... Yeah, no, the echo was intentional. So now when you actually need to have legitimate collateralizable? The verb for collateral. And making it collateral. When you actually need the best of the best thing that isn't cash, because if you inject more cash, you're just driving inflation even more. So you take the front end of the curve and you swap it to the back end, where instead of just putting cash and front loading it, you'll then put in a long-term IOU, right? Where instead of injecting $1 billion in cash into the front end of the equation, you'll instead write a treasury note of some sort that, there's a lot of math involved with it, from what I understand. But instead of putting cash up front, now you've made your inflation situation even worse. Instead of putting cash up front, you're going to put it in the back end of things, right? Where at the end of whatever that note, whenever that note is due, right? Whenever it pays out or expires, whatever, I can't remember terms. So instead of putting $10 billion in now, you're going to put a note for $10 billion with you'll make it a 10-year note, right? And the idea is that instead of injecting it all at once, you're going to put it into the back end of things so that those who actually want to help, you're forcing cash back into the market rather than printing it. You can't just write treasury notes like that, though. You just can't, right? Because now you're making inflation worse on that end of things. So you need to get it back, right? Because now that there's going to be tapering and whatnot, and we're going to try to deflate things, pulling those fucking notes back is damn near impossible. Because now those who have them get to name the price. Well, where are they? Oh, they were lent out. Right. They became a part of the securities lending layer of the market. So now the prime broker, the banks are in a short position here because they were originally taking a quasi short position that the Fed had. So you have the Fed who's issuing pretty much, you can think of it as a short, right? And I'm not saying stock, I just mean conceptually here, right? You're receiving a credit to then later pay something back, right? You sell a stock now to then buy it back cheaper. So the Fed writing treasury notes like that is the U.S. economy taking a short position against itself. And not all short positions are bad. It's just a way to capitalize on having more valuable time than more valuable whatever, an asset or this or that or whatever. If time is more valuable than the thing you're selling, well, why not just sell the end result now, knowing that the time will depreciate the value of the thing after the time has gone by. So that's how you can view a treasury note. The treasury note was then given out to a bank because of COVID, right? So that those could be used as the nut up or shut up currency for writing 0% interest loans and other reasons. The banks, because they didn't want to give up their cash for their bratty little kid hedge fund, then collateralize and put up with treasury notes instead of cash or other assets. So now the bank is in a fucking short position because now the Fed wants it back. That's your equivalent of a share recall. Back to the fucking DD by Van Cleavage here, because I am just a fucking dimwit and can't stay focused. So I'm going to recap the last couple paragraphs here. So the Fed is going to mitigate this nightmare, or how is the Fed going to mitigate this nightmare scenario of not having anything to help ease the process of deflating? Under the SRF, the Federal Reserve will conduct daily overnight repo operations against Treasury securities, agency debt securities, and agency mortgage-backed securities, with a maximum operation size of $500 billion. Right now, we are double that in the reverse repo market, which is what this is replacing for what it's being used for. The minimum bid rate for the facility will be set to 25 basis points, so 0.25%, which is somewhat above the general level of current overnight interest rates within the standard reverse repo markets, which is 5 basis points. This shit is going to quintuple? Is that what 5 is? You have double, triple, quadruple, whatever, it doesn't matter. So it's going up 5 times versus what it is right now within the current reverse repo market. Yeah. This hurts whoever is using the reverse repo market by 5x on top of the additional margin requirements that are coming out in a week, 2 weeks, week and a half, right? Because now, you're parking your long positions in the reverse repo market that we have currently, and it's 5 basis points. It's like that's your fee for pretty much skipping the whole covering thing, or at least part of it. Like that's part of the plan of kicking the can down the road, is utilizing the reverse repo market so that you can get some cash and then buy it back later. With this though, right? Because when you buy back that everything from the reverse repo market, right now they're only paying 5 basis points in interest. That's it. 20th of a percent, right? Now, 5x, right? Now they're going to be paying 0.25% for that. $1 trillion? 0.25% there is, what is that, $250 million? What's 0.25%? What's 0.25% of $1 trillion? It gets better? Yeah, no, Van Cleavage, I know, man. I had to tease him a little bit, and I had to tease myself. I gotta tease everybody. Eddie, that was their plan. And if you remember, Michael Burry had a tweet. Michael Burry had a tweet from however long ago of saying that Kenny intentionally sabotaged one of the engines so that they would be brought back to shore, right? I think this is what he was hinting at. Let's get back to this. Again, this was written by Van Cleavage in the chat, who's not mod for some reason, and I'm changing that right now. Harrison! Goddamn right he does. 250 billion? No, it's 250 billion? Wait. Oh, yeah, it would be. Yeah, it would be. Yep. Because there's 1,000 billions in a trillion. Yeah, the Burry tweets, yeah. I think that's what he was referencing. Gotta upvote this motherfucking shit right here. I'm gonna link the thread. If you guys like this, go leave an upvote. If you want to, if you like it, if you think it deserves it. I think it does. Oh, this is why the squeeze is necessary. Why it will not only happen, but is necessary. Nice fucking Jesus fuck, dude. Yeah, I should have listened to you like 20 minutes ago when you said keep reading. Let me make sure I didn't skip one of these. Hold on. I don't think I am. Yeah, no. Okay. So Van Cleavage goes on to say that this is why I think the squeeze will not only happen, but is necessary. Nobody wants to taper until we know what will happen when J-Pal's seat is up for grabs in February. Good point, too. But current conditions are screaming for tapering and quantitative tightening now, like alarm blaring code red right now. How does the Fed taper without actually enacting any tapering policies? You let a ton of diamond-handed apes get rich. On top of that, too, you're basically writing all these new stimulus checks that were due a long time ago, by the way, for the people. Because, like the UK, I don't remember how much you guys were getting. It was like $600 a week. And Canada was getting $2,000 a month. And fucking us, we got 3 checks, and that's it. Go have fun. The world's shitting itself, but hey, you can fucking pay your rent for a month. So now it's like having stimulus checks written by fucking corrupt bullshit Wall Street. Holy fucking shit. I was asked. Oh, this is by Van Cleavage again. I was asked about bonds by this guy on Simulate and Trade's YouTube channel. Shout out to Carlos. Little did he know, however, that I had been working on DD centered exactly around this topic. Good fucking shit, my man. It is of common knowledge that MOAS is directly linked to a market sell-off. My belief is that the market will sell off to a point that triggers the MOAS. Right. Yes. The net asset value under management for the enemy will collapse, which means that the margin balance... So everything starts to sell off, which means that whoever's short, their collective amount of money, right? What their net position is, what their portfolio balance has to say, will go under management for... Wait, hold on. Value under management. The balance sheet's going to be fucked, basically, as the market sells off, because a lot of these fuckers are long on Apple and not Tesla. Apple, Microsoft, Google, Netflix, everything. Your blue chips, your SPY, which is why SPY and fucking AMC and GameStop always behave the opposite of each other. It's because they're hedged. The net asset value under management for the enemy will collapse and they will be unable to maintain their margin requirements. We all know what happens when good old Mod calls. Based off of this premise, I started to look at possible causes as to why the market will potentially sell off in the future, hoping to find something of importance or a trigger to the MOAS. In this approach, I've come up with a theory as to not only why the MOAS is inevitable, but actually necessary to keep the financial system from collapsing. An extremely simple culmination of my research is reflected in the last slide of this YouTube comment interaction. Yeah, this is one of the best pieces of fucking DD that's come out in a long time, man. Good fucking shit. Good fucking shit. Yeah. Van, it sounds like you and me are a lot alike, because I didn't know jack shit about any of this stuff no more than just shy of 7 months ago now. That's fucking insane. That's fucking insane. If I remember right, the reason why they can't write new treasury notes is because as they do that, they're also at the same time reducing the yield, right? It's a form of dilution. It'd be like authorizing more shares of a stock that writes a dividend. Wait. Yeah, it'd be like writing more shares of a stock that issues a dividend. By increasing the amount of shares that are floating around, that doesn't change the dividend's value. Let me rephrase that. The company's value is not dependent on the stock entirely. The market cap does not have that much influence over. Sorry, the shares that are issued and authorized don't influence market cap, which is the shares outstanding times your share price. So by issuing out more shares, the dividend itself would have to reduce, because now if you're writing let's say you have $1,000 in extra cash that you're able to issue as a dividend, and there's 1,000 shares. If you then were to just do it like that, you issue your dividend with 1,000 shares. Each share would get $1 as a dollar dividend bonus. Now, if you start writing more shares, right? It's not that you're reducing the value of the company, conventionally speaking. Naked shorting is a different conversation. But standard company authorizing more shares doesn't influence its market cap. I'm sorry, if you did like a split or whatever. I'm going too foobar everywhere. Point being is that the dividend would have to be reduced across each share. So the same thing would happen with your bonds. If you start writing more bonds, treasury notes, the yield would have to fall with it. I just want to know if I'm even right, because if I am, bro, this could be huge. Oh, yeah. You're 22, right? I turned 21 in July. Oh, good shit. Yeah. Yeah. I'm April. April's my birthday. I think you skipped my comment above. Did I? No, I didn't. No, I read this. Or this, I mean. Check out Charlie's vids. Oh yeah, Van, if you haven't looked at anybody here actually, if you haven't checked out Charlie's vids, he's a lot more into the legalese and market fundamentals or economy fundamentals of things. And just a super smart fucking guy. I love Charlie. Like the option between a Lambo or Tesla. Hey, Astro, why is your portfolio more into AMC than GameStop? I'm not trying to shill for GME. Just want to know if there is a more potential for AMC. Greetings from Germany. Oh, you're good, man. And hello from here in the States. I want to touch on that note real quick. Having to apologize for sounding like a shill. I have no discrepancy between AMC or GameStop. I think they're the same. At the beginning of this, before the squeeze in January, they were different, yes. But after the squeeze, it revealed the fact that they're in the same boat. They're in the same boat. And with the sheer amount of chaos that will ensue when the squeeze happens, whichever has more short interest, or whichever has less dilution, or whichever has better leadership, whatever argument is going on between the children of the two sides, bantering and bitching at each other, which is totally not productive and counterproductive, actually. It doesn't matter. It doesn't matter. Because there's going to be covering of unimaginable rate between both that completely disregards how much dilution is in one or the other, or any of that. Same pattern, different charts. Yeah. I mean, look, I've already memorized these. I literally have the fucking images of these charts in my head because I stare at them so much. GameStop's looks like this. I don't even have to show you. I don't even have to show you their chart. It's like this. This shape right here. I call it the double Dorito because it's a double triangle. Right? But it's on the macro scale. This is a 2 hour. You have to zoom out. And this is AMC that we're looking at, by the way. GameStop's chart looks just like this right now. This is what GameStop's chart looks like. The old double macro Dorito. I don't even have to look at it. I already know. I can't wait for the community to catch on to the cycle and realize it. Yeah, and what the fuck did I tell you, huh? What did I fucking tell you? What did I tell you? Look at it. It's a beautiful double Dorito, too. You know what it's doing? Guess what? This... Fuck. I want someone to clip this and put it on Reddit, please. This right here... This shape... I'm going to zoom out a little bit more just to capture the fucking magnitude of what I'm about to say. This entire shape right here. Alright? This squeeze. The squeeze from January, back when they turn off the buy button, because fuck fundamentally adhering to capitalism, where you have the operation of price discovery via supply and demand. You just remove the fucking demand, take the buy button away. Free market. Right? Memorize this shape right here. Actually, don't even have to do that. Hold on. Ready? Ready? Are you fuckers ready for this? Because the same thing's happening with AMC right now. Look at this. Okay? This is current. This is from January to now. You want to see what happened before the squeeze in January? the pre-squeeze, right? Which was still a squeeze. Okay, I'm gonna go to GameStop. Okay, both of these are GameStop. You can see how they're synced up in the charts, right? You can see the crosshair move around on both. You see the drawing sync up, right? Look at this. Are you ready for something? Are you ready for something? Look at this shit. I'm going to change this to the 4 hour just so you can really capture this. Look at this shit. You run up, you fall halfway down, you go back up, retest, get rejected, trade back down, double macro Dorito, right? Go back up, right? Okay, well, look what happens right here, right? This was when GameStop was at between $15 and $11. Look what happened shortly after. Okay? Here's your double Dorito. Here's your double Dorito. Right? This is your double Dorito, and then you shoot up to $500 a share, and then they cut it off. Stream's dying? What? Am I still live? Hello? No video? Oh, fuck. God damn it. Okay. Okay, I'm gonna start from the beginning. This is actually a good opportunity because then I can do this in a much more elegant way. Hold on. Okay. Anybody in here right now? All right. Anybody in here who wants to get a fuck ton of karma on Reddit? Get ready to clip what I'm about to show. All right. Clip it, record it, I don't care. You can post it. You can post it. But I ask that you post it because I'm so tired of getting raped by Automod anytime I try to share any content. All right, listen. And I'm putting on the shades out of homage and respect for deep fucking value because I think this is what he saw. I think this is what he saw. I hope that roaring kitty somehow, some way, one, watches this. Okay. 2, if this is what you saw, please just wink an eye, nod your head, something, right? Something that I'll notice. If this is what you saw, if this is part of why you decided to have your thesis around GameStop. On top of fundamentals, of course. All right, fuckers, you ready? I love GME, okay? I love AMC. If you're one of the people who is a zealot, elitist, pompous cunt of either side of AMC or GameStop and try to shit on the other side, fuck you. They're one and the same. They're one and the same. All right? Let me tweet this. I want to make sure this gets out there. I don't ask for this much. If you enjoy the stream, if you think it's worth having other people watch, please share it, leave a like, subscribe, only if you feel it deserves it. Don't do it because I mentioned it. Only do it if you feel it deserves it. If you don't like it, leave a dislike. I don't blame you. Okay? I'm going to tweet it out. Okay. Good morning, Tony. Holy shit. All right. So listen. If you haven't watched the previous cycle video that explains everything to its totality, I ask that you do so that you're completely up to date with this. You don't have to do it right now. I'll try to bridge the gaps when needed. Right. In the meantime, though, this is going to be the bombshell. Okay. The cycle basically is the understanding that this general pattern, if you take the squeeze, right? It's fucking all over the place. If you take the squeeze, where I need to actually zoom in because I'm on the day chart there, I think, and it doesn't capture what I need it to. So let's go and see what this thing looked like before the squeeze. The squeeze, right? It had squoze a lot beforehand, but never what had come afterward was never ever imaginable by most, at least. So this is what your full cycle will look like. It's fucking everywhere on the charts, and it's scary as shit. I don't know why this is okay. This should not be a thing. I'm going to zoom in more, just so you get more granularity. Right? So these are both GameStop. Okay? All of these charts are GameStop, first off. It's these two right here that you need to pay attention to the most for the moment. Okay? These are both GameStop. All right? This chart right here is going on almost a year of trading. This is almost a year of trading. This chart right here is less than a week. On the left-hand side is almost a year of trading. The chart in the top right here, is just shy of a week of trading. They look fucking identical. Okay? Watch this. Okay? This is what a cycle iteration looks like right here. This is a full cycle. You know that you're going into the next one when this happens. You have what I call the incline whipsaw. Okay, it looks like an ice climbing pick, or a little golf flag, right? Oh shit! What did I just do? Go away. So it looks like this. You go up, and then your candles will have like quadruple bottoms, basically, and it looks like that then and there that you're gonna fall through this support as your bullish pressure is lessening, right? It looks like it's gonna fall through, and then psych, bitch. No. You go 5x in price in a matter of 24 hours. Okay? So that's how you can tell when you're at the end of a cycle, is when you can have your initial run up in the same frame as the incline whipsaw. And look what happens when you zoom out, okay? This point right here on the right is going to remain static. Okay, this isn't going to move. The only thing that's going to move is on the left-hand side of this chart. All right, that's where the expansion is going to happen. Look. It's the same thing. Right here. The same thing. If you aren't familiar with candle anatomy, this isn't going to look like much of significance or resemblance. But if you can identify where the wicks are, and imagine that this chart has more granularity to it, because historically I can't go past 5 minutes. They don't store 1 minute candle data. So I can't increase the granularity of this, the resolution of this candle, if you will. But if you can look at where the wicks occur, you can see the exact same thing as what happened back here. Okay? Now here's the takeaway. Here's the fucking bombshell for you, okay? If anybody is recording this or clipping it, here you go. The internet's chopping? You're kidding. You're joking. Is the stream lagging? What the fuck? You can still hear? Wait. Okay, is it better now? This is the second time in a row. You're good on my end? Okay. Wow, okay. Audio's good. It was the video. Okay. I don't know why. I don't know why that has been happening. We're gonna do this one more time. Alright? Bro got that Dollar General internet. Yeah, bitch, because all my money's in the market. What the hell? Work through it. Might be rough service. It's a fucking Saturday morning. I don't know who the hell could be congesting the node that is in my area. Am I being trolled? They're onto you. I'm pulling it up. Oh no, it sure as shit is. What the fuck? Oh, I think I know. I think I know. It's Dave's Daily Trades! Oh my god! Oh my god, Dave! Dave! I'm so glad you took away his internet, because you obviously do all the DD. Thank you! Thank you! Oh my god! Dave's Daily Trades! Get the fuck off the fucking stream. No, I think it's just my computer shitting itself, because for some reason it just doesn't. Hold on. That's a little too zoomed in. And I'm sorry for the tease here. I don't like actually teasing something, at least in the moment. What the fuck? Is it doing it again?